Ben ritrovati martedì mattina su floor del New York Stock Exchange. In questo momento indici tutti in territorio negativo, l'attenzione naturalmente è ancora rivolta alle trimestrali, ma anche a quello che è il dibattito sull'innalzamento del tetto del debito a Washington e sugli ultimi dati economici. Ma ne parliamo con il mio ospite qui su floor, che è Mark Otto, Designated Market Maker per Knight Capital Americas. Mark, thank you so much for being with us again.
Thanks for having me back.
So, Mark, I was just saying that, of course, the earnings are going to be in focus this week, but we are having a lot of economic figures this morning, and is igniting. The debate is igniting in Washington for the debt.
Yeah, it seems as though once again, and we can't escape Washington. Politicians are going back and forth debating on the debt ceiling debate. So that's going to come more to a boil in the middle of February. However, we're already seeing early volleys going back and forth between the parties. So obviously, it's had some impact. Fitch has actually threatened to lower our ratings. If this situation seems to unravel. So that's definitely something that's going to impact markets. This morning, as you said, we had some decent economic data that came out. Retail sales came out better than expected. PPI lowered for the last, third month in a row. Apparently, food was a big factor in that. So that's something that we're looking at. And German GDP for fourth quarter 2012 shrank by 0.5%. So Germany's
You're not worried about the manufacturing, the Empire Index?
The Empire State Manufacturing Index, they missed, but it wasn't too severe. So, I think that's sort of a non-factor at this point. Later on this week, we're going to hear from the Philly Fed and Michigan confidence numbers. That's something that we'll definitely keep an eye on as well.
Now, going back to the debt ceiling, we heard also Ben Bernanke talk last night after the closing, the market closing, and even Bernanke is really, calling for Washington and the Congress to just find an agreement on it. What do you think?
Well, I think it's smart. It is a critical situation. They seem to always come through, whether it's the last minute or not, in the past. So I think that what they're trying to avoid is what happened with the fiscal cliff, where it is the 11th hour, and they come to some sort of an agreement.
Would it be possible, do you think, or politics will play until mid-February, early March, until the last minute?
I hate to say it, but if recent history shows us what happened with the fiscal cliff, it's absolutely possible. It seems to be a lot of infighting between the parties, and it seems to be more as though that that they're more worried about winning for their party than the actual issues, which is really a shame.
To keep their seat
Yes.
as well. So do you think that could it be possible that the market will stay on the sidelines until we will have an answer? I mean, Fitch made it clear there could be big consequences.
Yes, but we all know in the back of our minds, traders will keep in the back of their minds that it is mid-February when we're actually going to come to a boil on this issue. So if they do seem to keep it on the back burners and realize that it's not critical right now in our face, well then perhaps people will start looking at earnings more. So earnings are not expected to be a driving catalyst for the upside, that's for sure. However, if guidance is decent and they do jump over the low hurdles, we could actually stay at these levels, hopefully.
And we're going to have a lot of earnings this week on banks, all the major banks. We already saw Wells Fargo kind of like disappointed in terms of margins too. So what do you expect for the entire sector?
Well, banks, financials as a whole is actually something that's ear-tabbed to be an outperformer. So this could be a very big tell sign for the earnings to come. So, laggards are ear-tabbed to be industrials, IT, and healthcare. So, if the strong ones that they're supposed to outperform don't do well, that could bode, not so good for the market. It could definitely be a bearish indicator for earnings to come.
So this week is going to be very crucial, you think? I mean, what can we expect from the market?
Well, we do have more economic data coming out, this week. So tomorrow we're going to have Eurozone CPI coming out tomorrow. The Federal Reserve will release the Beige Book tomorrow. After that, on Thursday, we're going to have the ECB monthly report. Initial jobless claims here. Housing startups, building permits will also come out on Thursday, and the Philly Fed. Then we move to Friday. The Michigan confidence numbers will come out here in the United States. And then we'll be looking east. So between Thursday, at the middle of the night and Friday morning, we're going to have a lot of data coming out of China. So, probably the most critical is going to be the GDP. So GDP for China fourth quarter is supposed to be 7.8%, versus 7.4% previously. Most people think that they're going to end the year at 7.7%. The interesting thing I'm finding out of China is it's actually coming more and more to the forefront as they've rebounded in the last quarter of 2012, and all indications are with macroeconomic data that they're looking at the upside. So we're going to be looking at industrial production out of China as well at night, and retail sales and property sales. So those are going to be some really big indicators as to if China is really making the turn.
And you think that they're going to keep momentum after the fourth quarter?
I do think so. I don't think it's going to be a dramatic turn to the upside as far as being a catalyst for global economies to actually attach to. However, I don't think that they will disappoint. I think that it's going to be a rocky road ahead, but the trend will be upward. China actually officially made their GDP forecast for 2013 7.5%, which is unchanged. So
and they're usually very conservative, right?
absolutely, they usually aim low and they hit much higher above that. However, the Chinese number one think tank in China, the CASS, actually came out with 8.2% for China's GDP for 2013. So there's somewhat of a disparity. I'm more of an optimist. I think the think tank's probably going to be closer to the money, hopefully.
Those are the independence one, supposedly.
Absolutely, yes.
So now, give me some levels for today for the S&P 500.
Well, in the back of everyone's mind, we keep pinging against this 1470 level, right? So 1466 is actually a level that we're sitting on right here. On the upside, 1471, then 1482. On the downside, it's 1459 and then 1451. If longer term targets to the downside, everyone's going to keep in the back of their mind that there is that gap that many think that we need to fill between 14 quarter to 14 and a half. So that's something to keep in the back of your mind as well.
And it might happen this week in case we have really disappointing news.
Let's hope not.
Thank you very much, Mark, for being with us.
My pleasure.
E grazie a voi per l'attenzione. A domani.